Hello, I am Lyenda Delp, head of BlackRock's Financial Institutional Group for the Americas, and thank you for joining BlackRock and the International Insurance Society for this three-part video series uncovering key findings from our 2022 Global Insurance Report Survey. Our survey includes responses from 370 insurance company executives across 26 global markets regarding their investment and business priorities for the year ahead. Together, these firms are responsible for over 28 trillion US dollars. Today, I'm very pleased to be joined by Christopher Castaldo, CFO of QBE's North America business, to discuss some of the major challenges, the changes, and the opportunities as well that are present within the insurance industry. We will bring to light some insights that overlap what we saw in the insurance report. Christopher has nearly 20 years of experience in the financial services and P&C insurance sector specifically, 8 of which have been with QBE. Welcome, Christopher. I'm delighted to have you with me in the conversation today. To start with, I'd like to talk about some of the transformative shifts that have occurred over the last few years, particularly since the start of the pandemic. We've been forced to embrace new technologies, virtual collaboration, and different distribution strategies, basically overnight. Can you share a bit of your perspective on some of the most significant changes you had to confront? And before that, maybe tell the audience a bit about your broad remit at QBE.
Thank you and good morning, Lyenda. Really happy to be here today. And so, yes, as the Chief Financial Officer for QBE's North America business, that's, we're responsible for a pretty broad remit of what QBE does globally. So QBE is a large global insurer and reinsurer that's listed on the Australian Stock Exchange. And here we participate in a variety of commercial and specialty lines in the insurance P&C sector here in the US. And so happy to be here and give a little bit of perspective on the insurance industry. And your first question had a bit to it, right? In terms of new technology, distribution, and new products. And so maybe what I'll do is actually spend a moment just talking a little bit about some of the impetus for that transformation over the past few years, because I think it touches on each of those. And I think a lot of it comes down to a combination of new and emerging risks, as well as heightened intensity, perhaps, of what have been some continuous risks over time that matter to many of our customers. And so when I'm talking about new risks, I'm talking about things like cybersecurity and cyber risk. Intellectual property has become a more increasingly important asset to many of our customers. The intensity of climate is certainly very different today than what it was a handful of years ago. And the industry has had to react in order to innovate rather quickly to meet these new and emerging demands and needs that our customers have. And I think that's created an interesting opportunity for distribution and carriers in the insurance space to work together quite differently than they have in the past to innovate around new products and new ideas. Think about how risk can be spread very differently across the industry. It's created a need for predictive capability that extends well beyond maybe the traditional toolkit of our underwriters. And this has created an avenue for disruption. And I think you've seen a lot of that in terms of what's arisen with insurtechs because of the need to harness and access data rather quickly and in a far more agile way than perhaps was required in the past because of the need to be far more forensic in how we select, underwrite, and price risk. And I think the traditional insurer value proposition has shifted greatly. It really now extends beyond what has traditionally been a provider of capacity to back risks to one that's really much a provider of also providing solutions to help our customers mitigate risk and become more resilient to risk. And I think what's also been interesting is a lot of these new and emerging risks have second and third order impacts, and has sort of
Mhm.
increased the need to be greater, far greater prepared for what might occur.
That's a lot to chew on there, Christopher. Thank you, but very significant. And I think it brings to mind the broader macro environment that we all operate in, have so many, as you said, intensified risks, new and emerging risks. When you think about the macro environment, with that particular context, what are the main concerns of the many things that you're focusing on in your organization that are more macro driven, and how are you sort of looking at those in the near term?
Sure, there's a lot there too. Listen, I think a lot of the standard indicators are still the indicators that certainly matter, right? So we focus on what might happen. Inflation matters, recessionary risk matters, unemployment matters, the housing market matters. So all of these are inputs into how we think about how changes in our business and performance could potentially unfold. But these are all sort of impossible to predict which specific direction it might head. And I certainly will try not to give any guidance around that. I think what we try to spend more time on is making sure that we are prepared for a variety of different outcomes or permutations that might occur, and that the decision sets we have as an organization and as an industry are less encumbered and more agile, so that we can adapt quickly, audible quickly, depending on what might occur. And so it's really that resiliency in planning that's become more and more important than maybe traditionally how we would have thought or concerned ourselves about what might happen and how. But if there's one area that certainly gives rise for concern, it's probably more on the geopolitical side. When I reflect a little bit, and I'll use the example maybe of the Russian-Ukraine conflict, there's the obvious traditional impacts that we would have seen across the insurance sector when you think about the role insurance plays around political violence, for example. But it's really been the second and third order impacts, many of these unanticipated, that I think, as things have unfolded, have probably surprised us a little bit, right? And
Yeah.
increased the importance of being prepared. When you think about how the conflict has really extended into supply chains, how it's extended into agriculture, and here at QBE, we are a large insurer in the agriculture space, and so it's been quite eye-opening, and just stresses the importance of having a good anticipatory reflex in a world that's constantly changing, and also stresses the importance of having diversified books of business. And that goes
Yes.
beyond just diversification in our assets, but also diversification in our underwriting, making sure that we participate in businesses such as crop that almost have a degree of counter-cyclicality to them, and it becomes a really good defense mechanism in environments such as this.
Right, right. Well, when I think about, crop insurance and resilience, which you've, emphasized in your last response, it seems quite natural then that QB is a leader in sustainability, has been sort of, at the forefront and made some really innovative developments there. Could you tell us a little bit more about how QB has gone from establishing sustainability commitments to tracking progress? And we know that you have several initiatives, but maybe you could just comment on a couple as what have been some of the focus at QB in developing that focus on sustainability.
Well, firstly, Lyenda, thank you for the compliments. I am proud of the journey that QBE has been on. I think being part of a global organization that's headquartered in Australia but has a footprint all over the globe, sustainability absolutely matters. I think the maturity of organizations around sustainability and their journey is quite different, and so I'm proud of where we are, but there's a long way to go, and there's some hard yards ahead of us. I think from a macro backdrop, the insurance industry has a really important role to play when you think about how many communities we touch, how many different types of businesses we touch. If I use climate as an example, I think the insurance industry is in a unique position to help the world better understand climate, right? When you think about our access to data and our predictive capabilities and the role we can play in helping communities and cities rebuild or be better prepared in how they build and become more resilient. So I think there's a huge opportunity for the industry as a whole. Reflecting back on QBE, integrating sustainability into how we do business is important because it helps us reduce risk, it stimulates innovation, and it really has a positive and impactful contribution to both the environment and society. We've looked at fostering an orderly transition to a net zero economy, and we've got a role to play in that across our underwriting, our investments, our operations, and supply chains, and our commitments are very much in line with the Paris Agreement. What's also important to us is ensuring that we've got a sustainable and resilient workforce, and our commitments around diversity, our commitments around women in leadership absolutely matter. And also what's been pretty cool is probably a third piece, which is really around how we partner for growth through innovative solutions. And one call out I'd make is around what we refer to as our Premiums for Good initiative. And this is an initiative where we've made a commitment to allocate approximately $2 billion of our investment portfolio to opportunities that have either a social or environmental impact. And our commitment around a $2 billion asset allocation is out into 2025, and we've made some meaningful strides already against that. And this is a really cool opportunity where we're actually able to connect our commitment to sustainability in with our customers, where customers can allocate a portion of their premium to investments that have a social or environmental impact. And so I think it's really where we've been able to take our commitment and extend it beyond our own, commitment to regulators and commitment to communities, but actually have a customer touch point as well. And when push comes to shove, I think, sustainability matters. It matters to our regulators. It does matter to our customers. It matters to our people. It's a really powerful engagement tool with our workforce as well. And ultimately, it also matters to access to capital, right? It's becoming increasingly important to investors, and the ability to attract quality capital. And our commitment to sustainability matters, and they want to see that it features in our decision-making and the strategies of the firm. They want to see that the commitments we're making are ultimately commitments that we can track and measure against. And so I think it's here to stay, and I think there's a long runway ahead of us.
That's great. You know what? You made some really compelling points, and I also loved the passion and emotional engagement I saw as you were talking about those. It's like you all really believe this, and it makes a difference. It really does. So thank you for sharing all that. You touched on innovation a couple of times in your response. So in my next quick question, I just wanted to see how is, when you think about innovation, it's almost natural that the word technology is associated with it. So how is QB thinking about technology, strategy and perhaps digital transformation? That was one of the areas that showed up in the report as definitively an area where one of the top 3 areas that insurers were focused on: innovation and technology transformation. So what are you thinking about in that regard?
Yeah, so modernization is very much one of our core strategic priorities. In an industry that can certainly be accused of being quite archaic, the definition is probably different for many, but for us, it really started with actually modernizing our technology stack, right? How do we actually just make the right foundational investments to make sure that we're able to compete today? And off the back of those, digitalization for us is really about digitalizing workflows. How do we change
Got it.
the workflow and the day-to-day of your average underwriter, right? And that then translates over time to different skill sets that our underwriting community will likely require. An underwriting community that's more tech savvy, data literate, and data based and data driven in its decisioning around how we ultimately select and price risk.
Very important. Yeah. So as we close, I've really enjoyed our conversation, but I know that we're time constrained. So I'd love to just close with, hearing a little bit about what are the things that keep you up at night as insurance company. I know you're thinking about risks all the time, but what are those, unique ones that are extremely out there? And then on the flip side, what excites you? What are you looking forward to?
So in my role, I probably have a bias toward things that keep me up at night. I think it's natural to spend more time worrying than excited, but I'll attempt to answer both sides of that. So what keeps me up at night? Listen, I talked a little earlier about new and emerging risks. So what I really worry about is the severity of some of these risks and ultimately the impact that has on our customers, right? The risk that certain things actually certain risk could be uninsurable, right? Or less insurable. And that concerns me. And so I think there's a solution to that, hopefully, which is one where carriers and other organizations, adjacent organizations, can think about how they partner differently. How do we spread risk better? How do we get more innovative with the solutions? How do we actually partner with organizations outside of the insurance industry to provide better risk mitigation strategies up front, better strategies for how we build our communities to be more resilient to weather? And so there are absolutely solutions to this, but I think it's the risk around uninsurability that scares me the most, because that impacts our customers. It impacts our customers to actually take risks themselves.
Right. Right.
What excites me is probably a little bit of the opposite of that. I think it probably is around the opportunity for people and talent in this industry. I think in the past, this is very much an industry that maybe didn't excite many of the youth coming out of school and joining the workforce, right? But I think the types of capabilities and diversity of experience sets that are required to think differently around solutions that will matter to our customers in a world that's constantly changing is exciting and really brings to bear a workforce that I can see shifting. And I think it just creates an opportunity for many, many more to join what I think is a fabulous industry.
Absolutely. A huge industry, certainly undergoing a lot of innovation and transformation. So I agree with you. Christopher, it's been a pleasure. Thank you so much for your thoughtful responses, for your patience, for your engagement. And I'd also like to thank the audience who have joined us and are watching our conversation today. I'd also invite you to watch the other discussions in this series. This is a 3-part series, and my colleagues, Anna Kazan, who is the head of the group, the insurance business in EMEA, Marcus Apardi, who heads our insurance solutions, have another conversation. And similarly, there's a conversation between our head of business strategy and the head of our Aladdin technology business. So in these videos, combined with this conversation that Christopher and I have just had, hopefully you'll get a sense about the exciting things that are going on in the insurance industry, and combined with the investment providers, and seek some opportunity in this interesting changing world. Thanks, everyone. Have a great day.